And our next guest says, according to his firm's research, we have begun a jobs recovery. This is Mark Anderson. He's president and chief economist at ExecuNet, a networking firm for recruiters and for executives. There are really, make sense of it here for me, Mark, because there are sort of two messages in here. They're cross currents. It looked like we had 5 months of improvements in payroll, but then we saw 85,000 jobs lost in December. What are you seeing out there? Because this brings to mind the question of a V or a W-shaped recovery.
Well, and that's a really good question, Margaret, because when we look at the numbers in the long term, today's number was disappointing from an expectation standpoint. But when you look at the long-term trend, there's been a major improvement and shift. And we see that on the executive level, and that typically leads the entire marketplace. So when you look at one number, it can often be too good or too bad in terms of the long-term trend. But we really see that we're seeing increased job creation on the executive level, and that typically is a forerunner for what you're going to see in the marketplace. And that's why we're optimistic.
You are optimistic.
We are.
Right before we started this segment, we ran a soundbite there from Tony Crescenzi of PIMCO, and he sort of threw a grain of salt into this conversation by saying there's a tremendous amount of fatigue out there. There are people who have simply stopped looking or are waiting to look, and because of that, perhaps the numbers we're seeing aren't accurate. Are you seeing that in your line of business, that people are sort of removing themselves from the job search?
Not necessarily, though definitely lots of executives hunkered down during this environment. But going back to your V-shaped economy, we don't expect it's going to be off to the races, but we expect to see slow and steady growth. Now, in terms of what our indicators are, our recruiter confidence index, ExecuNet's measure, and we've been following this since the last recession, has always led job creation in the broader market by about 4 to 6 months. It's now jumped to 54%, up from 28% since the beginning of last year. And that's a significant change, and one that moves it into the area much like the producer manufacturing index, that anything over 50% is a sign of companies expanding. We also survey companies every month about job creation, and 14% of companies say they're adding, and only 3% say they're actually eliminating.
Right.
That change, if you went back to early 2009, was just the reverse, and significant cuts were happening. So the cuts have ended. Companies are starting to add jobs on the executive level, and that generally is a precursor to the job numbers turning upward. Now, it's not going to be robust. It's going to be slow and steady, so it's not going to be your V shape, but that doesn't mean it isn't going to continue to progress. So 1 month's numbers don't really change that long-term trend.
So once we accept maybe that jobs are starting to be created here, that hiring is happening, it leads us to the question of whether things remain flat for a while in terms of pay and in terms of the sort of benefits that people can get if they can get a new job. How do pay packages now stack up versus the things you were seeing 2 years ago?
They're definitely lower, or the percentage increases for making changes
How
are lower.
much lower? I mean, what should people expect if they are looking for a job?
For people who are in a transition situation where they're out of a job and looking, it's going to be flat to potentially slightly negative. For those who actually see opportunity, and there is opportunity for A players in this marketplace in most industries, they're going to see upwards of 15% increases for the right job. Now, what happens in this environment is people are not as engaged in looking because they don't think there's a lot of opportunity. What we're seeing is an increase in opportunity in particular industries and in particular areas, and there's always opportunity in this marketplace.
Which industries?
The top industries at this time are really healthcare, clean, green technology, in the environment, energy, and pharmaceuticals and medical products. But importantly, even high tech is showing strength, which says companies are continuing to invest and reinvest, and those companies that are internationally focused and also fall into that category, you're going to see growth and opportunity. Small companies and small to medium-sized companies are also going to be the real job creators in this environment.
We'll keep watching that. Thank you so much for giving us some context and start to paint the picture around the figures.
Thank you, Mark.